Hello traders, Gary Wagner here, approximately 11:30 in Honolulu. It is Thursday, the 13th day of October, and this is the daily report for gold. We do have a round of profit taking currently taking way in the gold market, currently down about $8 on the day. As you can see in our spot month, trading at 1666, don't really like that number a lot. And over in our most active December contract at the COMEX, 1668. In terms of other markets right now, we do have the dollar right now, which is slightly firmer, and that is supportive of the dollar and, of course, bearish on the precious metals market, specifically gold. We are sitting in a long position, but I will tell you this. The fact that we were not able to take out on a closing basis that 1680, it's become an elusive number. It is concerning me. When we look at the MACD, these lines are tending to move apart. And so in terms of straight technical indicators, it is showing us some strength. However, at the same time, when we look at the fact that as this market moves up, we are getting a series of higher lows. That's good. We are getting a series of higher highs. This, of course, this is our daily chart, COMEX. But it seems as though we're running into almost this brick wall right here. We do have some solid resistance up at around, as I said, the 80 mark, 1680. Now, as you're probably aware of, one of the main reasons that I have been looking at in terms of our price targets is that it's my belief in terms of our major count right now on the Elliott wave, that we have just probably entered a B wave. And the way that we would look at it is this, and I want to go through and give you the entire long count and kind of the way that it works this morning. We're going to start with C here and C here. You've got a major C and a intermediate C, so it really begins the count, and this of course is going to be your intermediate count, which simply goes 1, 2, 3, 4, and 5. Now within that 1, 2, 3, 4, and 5, of course, the intermediate count, you have a major count, so that 1, 2, 3, 4, 5 simply becomes 1, and it looks something like this. And of course, we can continue to do that. On the way down, you get an A, a B, and a C, and that, of course, is your number 2. And then it goes back 1, 2, 3, 4, 5, and then, of course, A. This was a long one, B, and then a C. That took us from 3 to 4. And then, of course, once this is that mother of all waves, 1, 2, 3, 4, and 5. Now, when you consider the fact that's our intermediate count, and typically that is a count that I work with and I look at almost all of the time, but you want to realize when you do that, you've still got your 1, 2, 3, 4, 5, and in that way, A, B, and C, and then 1, 2, 3, 4, 5. These here, once again, are all of 4 to 5. So the reason for bringing that up is that when we look at what we've just gone through in terms of the marketplace itself, we have our A, our B, and our C on our intermediate count. But in terms of a major count, and the major count is really what we're looking at, that has just been a 1, which is your A, and this is, of course, the B right in here. Typically on a B wave, you're going to get anywhere between 50 and 75% of the move, and that's where I have originated the numbers that I came up with, roughly at around, I believe, 1724. We'll go ahead and pull that chart up. And so this is the chart that I've been using for that. It's just simply a weekly spot market. But what I'm simply doing is a Fibonacci, and this retracement, the Fib retracement, is looking at this particular move down, and 50% is 1724. 75%, of course, 1819. And my belief is that this market should trade somewhere in between that. The issue is we haven't been getting any ability to take out that 80, but we are getting a series. If you look over the last weeks, you've had higher lows and you have had higher highs. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up. Bye-bye.